A very good evening to you wherever you're tuning in. Welcome to our live webinar tonight. This is tsavo. tsavo, we are a real estate investment company, and we're passionate about financial independence. And we exist to enable our investors achieve financial independence and retire early. And so today's conversation is about conducting due diligence. And the real estate industry has been flawed with certain inconsistencies, in particular fraud, corruption, and unreasonable delays, which in turn now affect all the stakeholders that are in the real estate industry, including investors, landowners, developers, and also financiers. And it is unfortunately uncommon to hear stories of people losing their life savings, to investment fraud. And investment fraud is unfortunately quite common, even with the recent cases that we've been hearing in Athi River. And trust you me, it can happen to anyone, whether be it us, our friends, or even our family members. And people have lost their life savings to scams. And these people will promise you high returns and exclusive opportunities, which now the impact of such losses can be very devastating. And it is difficult. Sometimes it is very difficult to recover both financially and emotionally. And we've heard of the cases of briefcase offices and where fraudulent businesses will just open and disappear and transform into something else overnight, and which is a tactic that has been used by fraudsters. And they lure unsuspecting individuals with promises of high returns and lucrative investments only to vanish with their money. But we care that you don't fall into the same trap that many have fallen. And so in this webinar series, we'll be highlighting some of the key things you need to look out for in order for you to conduct due diligence. And why do you need to conduct due diligence? Some of the things that you need to look out for so that you don't fall into the same trap that many have fallen into. So my name is MC Benbeg with the Classic Man. I'm a fire partner here at tsavo, and today I'm joined by two amazing lawyers with us here. They are our partners. They work at FMC Advocates. So in our journey to enable investors achieve financial independence, we have partners who we work with, and in particular they work in the legal field. And FMC is a law firm and consultancy based in Westlands, Nairobi. The firm has a strong focus on real estate and project work in the residential and commercial ecosystems, and advises a broad spectrum of clients on land due diligence, property acquisitions for large-scale projects, structuring and management of joint ventures, transactional sales, leasing, post-completion, infrastructure services, and real estate planning and management. And on my left, my immediate left, I have Diana Wariara, who is a partner at FMC Advocates with a broad range of hands-on experience in real estate and conveyancing law. And she advises a wide range of clients on property construction matters and has achieved successful conclusion of numerous assignments for her clients. Adept in all transactional aspects of real estate, and she has a strong skill set to represent clients looking to invest in real estate ventures and help them manage their property and contractual interest. Karibu sana, Diana.
Thank you for having us.
And congratulations for making partner.
Thank you.
So on my far left, we have Fidel Mwaki. So Fidel is a partner at FMC Advocates with extensive knowledge and expertise in real estate matters in Kenya, and his practice centers on real estate developments and related commercial transactions, where he represents clients or developing, acquiring multi-use residential and commercial real estate. And he regularly advises clients on project structuring, documentation, including construction, contracts, agency agreements, and sale agreements and sectional titles. Karibu sana, Mr. Fidel.
Thank you very much.
We're glad to have you here.
Yeah, happy to be here.
Maybe before we go further, I'll ask Diana to lead us in a word of prayer, and then we can dive into the session.
Okay. Thank you, Mikwi. Let's bow our heads for a word of prayer. Heavenly Father, we come before you this day, giving thanks for the gift of life and for the opportunity to be here. As we start this webinar, Lord, we ask that you may go with us, that you may give us insights, walk with us, and enable us to be able to deliver the very best to our audience. In Jesus' name we pray.
Amen. And if you're joining us for the very first time, please make sure that you also hit the subscribe button, because we have more, we'll be having much more, and we've been having such webinars that are very informative, so that you don't miss out on exactly what we'll be delivering. And so if you're still tuning in, sending your fire emoji so that we know you tuned in. Now, guys, I did such an introduction, but maybe people are wondering, who are these people? Maybe you can tell us how you are, how is your week, how's the going? Yeah, let us know how you're doing.
Okay. Thanks, Mikwi, for having us.
You're welcome.
I'm Diana Valera, as Mikwi said. Thank you for that well-put introduction. I've had a lovely week, can't complain, and I'm happy to be here.
Wow, thank you.
Thank you, Mikwi. As you mentioned, I'm Fidel Maki. Very happy to be here. My week has been not too shabby. It's been okay. Busy week as well, but yeah, great to be here with you guys.
Oh, thank you. Thank you for allowing the invitation. And so they'll be sticking with us for the next couple of weeks, because we'll be getting to really dive deeper to understand what is due diligence and some of the things that you need to know. And we'll be welcoming your questions. So if you have questions that you have, please make sure that you put the questions down, and we'll get to respond to them. So before we get into our conversation today, I came across something quite interesting. I'm not sure whether it's true. So they say, arguing with a lawyer is like wrestling with a pig in mud.
With a what?
With a pig in mud. Yeah, so sooner or later you'll realize they like it. So I don't know whether it's true. That could get us into a whole argument, so just to avoid that, let's talk about due diligence. We've been seeing a lot of cases, especially now in the country. We can see there are many people who have lost their property at the river, and there are demolitions which are ongoing. Maybe it could be because most people did not conduct due diligence. So what are some of the things that maybe we can highlight concerning what is happening right now in the country?
Maybe I'll start. I think what's happening around the country and what we've seen in the news recently is it paints a picture of what happens across. It's something that is not uncommon. We see a lot of these kinds of evictions happening. A lot of it, of course, is painful for the people who are living there. It's a difficult process because a lot of it involves the court process and going to court and dealing with these issues, and it takes time. Like this one, I think took over 10 years to be resolved. So I think this topic is critical for us as lawyers, for tsavo as developers, for anybody. And in particular, I think it's critical for investors, people investing in property. I'll give an example. Even all of us, or some of us, have bought cars. Yeah, some of us have bought cars. When you buy a car, what do? Of course, you talk to the seller, you get a copy of the logbook. You may go to do a search on the car. You may ask your mechanic to do an inspection of the vehicle just to check that it's functioning properly. So at the end of the day, when you buy that car, this is the car that actually is going to take you for the next 5 years. With property, I think that level of due diligence has to be a bit higher, simply because of the way the Kenyan property market is. It's a market where there's a lot of fraud, there's a lot of misrepresentation, a lot of people out there who call them quacks, who are dealing with property and pushing property out there in the market. As an investor, of course, you have to be keen. And we said, when you're buying a car, you're keen, but with property, you have to be even more keen, and not, take a casual, attitude to purchasing property. Be much more involved in the process, ask questions, and I think that whole aspect of due diligence is the most critical part when you're looking to invest in property. And this topic really will hopefully highlight that for our investors.
So we have seen cases and maybe experiences are different. So maybe if you're viewing and maybe you've had a case, you know, people will say Nairobi ni shamba la mawe. So people have gone through it in Nairobi where you're told there's this property, we are selling this, and you put all your life savings in that property. And sooner than later, you came, you found there was an office here, but then tomorrow there's no office. And I'm pretty sure that I know of people who have been very depressed, even up to now. And this is like 15 years ago, because they lost everything. That was the only thing they were clinging on to for the rest of their lives. Like, it was a big investment. And so I think to just get us started, what is someone who has, maybe I've been saving a lot of money for my retirement, and this is my goal. Maybe I want to begin earning passive rental income, you know, so that I'm able to sort out my retirement. So as an investor, what are some of the things that I should look at from my perspective in terms of due diligence?
I think when you're talking about due diligence, the first thing is to actually decide on the investment that you want. And maybe we can give the example of you want to buy an apartment with tsavo. So, you know, the first step would be, number one, to actually identify the investment you want to see. And when you come here, they'll tell you this is the project that's on sale. You want to get this and this apartment number. You might want to see, you know, ongoing projects, completed projects. So you get a feel of their finishing and the final product. And, you know, you also get that confidence that they're able to deliver on their promise and to actually deliver on time. Because completing the project is one thing, but completing the project when you say you'd complete it is another critical aspect that comes into play, because it also affects when you start receiving your monthly income. So such things are very important. Identifying the investment, that's the real estate investment that you want. Once you've identified that particular investment, you know, you picked a project, you know where the project is, then you start asking, questions around that to all parties concerned. So you probably have like a fire partner who will walk you through that journey, and they'll walk you through that sales process. But you'll also want to know that particular project. Does the developer have a title for the project? Do they have the construction approvals? What is the, you know, what documentation is attached to this particular transaction? Are there issues that are pending that need to be resolved? You know, so once you ask those questions and you get answers, then you're able to assess the level of risk. And even something critical in which we've seen in our experience, when you're asking these questions, you'll find developers who are not so straightforward. Really, they really don't like it, so they like quick sales, and you'll find they're not responding, or they're not very straightforward with the answers that they give you, and that's usually our red flag. Because you'll find sometimes you know, a developer might not have all the construction approvals at that particular point, because they're obtained from different government entities, and they're usually delays, but they're very upfront about it, and they give updates and they share, you know, information. But somebody who withholds on information and, you know, is very avoidant when you ask questions, that's a red flag. That's a red flag right there. So once you see those documents, then you should be, you know, comfortable to go ahead and maybe put and sign the review, number one, of the offer letter. So you review the offer letter, you know the terms of the offer letter. Then once you review the offer letter, you can sign. You sign it, make a deposit, and after that you can review the sales agreement, which is now the binding document between you and the developer, and it now, highlights the obligations of all parties to this particular transaction, and what's expected of each party, and what happens in the event either party does not do what they were supposed to do. So this becomes the governing document between the two parties. So it's important that each investor reviews this document, that they understand this document in detail, and that they sign this document, because you'll find in Kenya, all transactions in respect to property must be reduced in writing, and both parties must sign them, and they must sign them in the presence of an advocate for that particular document to be binding.
Okay.
So it's important that you really, dot your I's and cross your T's when it comes to this particular process, so that in the event in future there's a dispute or there's an issue, then you have a document you can rely on. Yeah.
Okay.
And then I think something else that in this particular process that's very important for the parties to look at is when buying this investment, because you'll find sometimes I want to buy with my sister, or I want to buy with my friends, or I want to buy with my family. Then it's important for us to decide on like an investment vehicle. We want to form a company in which will acquire this property with, because you'll find there's always group dynamics that comes into play, and given that it's a long-term investment, you want to make it easier for each party down the line. In the event that one party is no longer interested in the transaction, that they can easily exit that particular transaction. So at this point, it's very critical before you sign any documentation that you've already agreed on the investment vehicle that you're using.
Maybe I can just add, especially what she was mentioning, like the group, you can have a group dynamic. I think one of the things we notice when we're handling transactions where there are groups involved is you'll find maybe one or two people in that group are very active when it comes to due diligence, but the rest are very passive. And I think for investors, they need to be, all of them need to be active. So all of them need to be like consciously asking questions about, the property, the developer, and not most of them, you shouldn't let two people take an active role and you remain passive. So I think that's one of the challenges that sometimes we see. Because later on down the line, when there are issues, the person who was not active suddenly doesn't know what's happening, and they were not keen at the beginning, and that creates problems as well.
Oh yeah, and we have seen cases where, spouses say that, no, you bought this property, I didn't know, and you lost the money. And of course, whatever happens, we see cases of divorce and such things coming out, and it is quite sad. I think there's still on that due diligence, if there's this whole analogy of catfishing, especially now in the Gen Z. So maybe I'd give an example of maybe people who are not real, who are not trustworthy, they're just fraudsters. They will try and do everything to make sure that they lure you into buying from them or even investing with them. And then sooner or later, these people will disappear. And of course, now due diligence becomes that process of actually reviewing and ensuring that whatever these people say to be true is actually true. Now, talking about that, now, what is due diligence when it comes to real estate investing? What exactly am I looking for when it comes to real estate investing?
Okay, I'll mention 4 things which I feel are important. Number 1, due diligence is an investigation on the title of the land, the title that the person is selling. So that's one thing. Second one, which I'll expound a bit more, due diligence on the seller or the landowner or the developer in Tsavo's case. The third one, I think, which is very important, is due diligence on past history. The history of the transaction, the history of the land, what happened before. And then I think the final one is an investigation on, or due diligence on, future engagement. What will happen in the future, once I've started this deal. So I think the first one, it's quite straightforward. The title, the land, it's critical. If you cannot get a search what's the problem, what's the problem. You need to find out why you cannot get a search. The search is going to show you who the owner is and if there are any what we call encumbrances. So encumbrance could be like if the bank, if the seller had taken a loan and charged the property to a bank. So that creates what's called an encumbrance. If there's an encumbrance on the title, what's the effect of that encumbrance? So if I want to buy that property, of course I don't want to buy it with the encumbrance. Will they discharge it? And by discharging, I mean will they remove the charge from the property? So that's a critical part of investigation of the title. The other part of investigation of the title is investigating what's on the ground, because the title relates to a physical asset on the ground. So it's important that you as an investor go on the ground and look, see what's there. If you're buying a bare piece of land, can't you do a survey, get a licensed surveyor to go on the land, to actually map up the land, see where the beacons are, see if there's anybody occupying the land and who is it. Is there anybody using the land frequently? We call them rights of way. So is somebody constantly passing across this land as though they've been using this path for like 20 years? That creates rights because it's now become like a usual path that people use. And then, just doing that due diligence, seeing who are the neighbors, what is the general use of that property in that area. I mean, you want to go and live there, but the use of that area is another use, it's an agricultural use. So those are things to look at when you look at the title. The other aspect I mentioned was doing some due diligence on the landowner. Like tsavo is a developer, so you want to do some due diligence on tsavo, maybe do a company search to check who are the directors, who are the people who are behind this company. And it's important because you'll find, as you said, there will be people who are catfishing or people who are misrepresenting themselves to the public, saying they are, experienced developers. When you do a search on these people, you can't find anywhere where they've ever developed anything in Kenya. They just set up a company and suddenly they're highly experienced developers. So just that, because that search also tells you a bit more about who you're dealing with. So doing a search on the landowner is critically important as well.
If we can just add something there. Even with the catfishing, you'll find, especially in this digital era, people they'll put up ads on social media that they're selling property, but it becomes very difficult to pinpoint an actual physical location. Or even when you visit the office, you'll find maybe the guy at the bottom is at the ground floor is telling you, they just moved in last month, but they claim to have been there for a longer period. So you'll find a lot of these briefcase companies don't have really a physical location, or even if you visit that physical location, you'll find like it doesn't look like it's established. So it's like a one room, one man operation kind of thing. So maybe at that point, it should start telling you something, or you should just make notes.
I think as an investor, just understanding who you're buying from it's a critical process. Sometimes, of course, people are there in between, maybe brokers or whatever. So again, you need to be keen to understand who exactly is the owner of the land. Another aspect I mentioned was past history. So we talked about in Kenya, this Etate River case, this is a prime example of there's a history of something that happened that led to people actually move into a piece of land and claim ownership. So when you're investigating land, look at the previous transaction that happened against that title. So there may be, there may have been like 3 or 4 transactions that happened. Is there a logical sequence? Are all the documents in order? So those are things that you can do when you do a search. And it's important that at least you have an idea of, what happened before. Because that also informs you, how did this person acquire the land that they're claiming to sell now? Did they acquire it properly, or was it an irregular acquisition? Those are things that when you're looking at past history, it's vitally important. And finally, I think an investigation on the future engagement. So say you buy this property, like with tsavo, you have a plan towards the end that you will be earning passive rental income. There'll be a property manager who will be managing. So those are questions you can ask. So how will this work? How will property management work? And the responses that you get from that will inform you whether this is an investment worthwhile. And she, she mentioned that aspect of communication. Are you receiving the right feedback? Or is somebody being evasive and not telling you what you need to know?
On this webinar series, because we'll be in the next, we'll be talking about understanding parties to the transaction. And I think we'll just get to understand how do you verify most of these people, like the number of things that Fidel has mentioned. How are you able to verify that actually these people are legitimate? Now, if now I've gotten there, what benefits accrue when I conduct due diligence? Because on the contrary, of course, there are repercussions. So maybe we can highlight some of these, benefits that I'll get after conducting due diligence, and also maybe some of the cons to it.
Okay. I think even before we go to the benefits of conducting due diligence, it's important that we handle a critical aspect of when I say due diligence, where am I supposed to start from? So maybe I can discuss that and Fidel can look at the benefits of due diligence. So essentially when you're doing due diligence, when you just, it starts from the very first interaction that you have with that party, the person you want to buy that particular asset from. So from that first interaction, that's due diligence up until you get your title. So it's an ongoing, continuous process where you're engaging this developer and up until you have a title in respect to your real estate investment. Then you're able to deal with it independently without intervention from the developer. So when you're doing due diligence, there's a first aspect which we had mentioned initially, for where you ask questions, you ask for the title documents, you ask for project approvals. Fidel had talked about inquiring on the past history. It's not enough to just do a land search on the property and assume that everything is okay. Should you do a land search, it's important that maybe, after 6 months you do another one, just to confirm that nothing has changed on that particular status. Because we've seen instances where at the start of the project, the developer had not charged the property. But since construction takes probably 3 years, an year and a half into the project, they decide to charge the property. And you'll find at that instance, the purchaser is not notified, and because they stopped doing their due diligence after they signed the agreement for sale, then at the time of issuing the title, they find then there's somebody else with an interest in that particular property, which actually increases their risk, especially if the developer is not fulfilling their obligations towards this particular financier. So such instances where you need to always be proactive in this particular investment.
I think maybe I'll just add, when you say ask the questions, learn to ask the right questions. And this is, and you'll find like investors who invest frequently start getting into that habit of knowing what are the questions to ask. So it's important that you just build that, understanding of real estate and the market, and be able to know when to ask the right question.
An example with what just Fidel has said right now is there was a change in law, and the type of apartment titles were being issued initially was a sublease. So right now, if I'm buying, I'd want to know, am I getting a sublease or a sectional title? And if you're giving me a sublease, why? Why are you giving me a sublease as opposed to a sectional title? So just doing your research and learning to ask the right questions. I think something else is like doing research on that particular investment, the parties you're dealing with, and what they've actually delivered on in the past, and whether there are issues that in respect to that particular. Let's say for instance, like right now in Nairobi, you'll find there's this ongoing process of converting titles. So do they have a converted title that's on the digital platform known as Adisasa? So that's the kind of research we're talking about. And sometimes you'll find if you're not a seasoned or if you're just getting into it, these are things that you might not know, or if you're not in the real estate industry, because it's a really dynamic industry, and things change quite a lot. So just you can consider just getting a legal expert to just come on board and help you with this particular process. Because now they know how to ask the right questions, they know which doors to knock on, to maybe you do the land search, and to do that, the background checks to confirm that everything is in order. So you get yourself a real estate lawyer, somebody who knows who's serving the real estate sector to help you out in this particular process. So they'll walk that journey with you end to end, and then they'll advise you, and based off what they tell you, then you can make an informed decision.
Maybe now moving on from what Dan has mentioned in terms of just being effective in terms of your diligence, asking the right questions. So what does this create? Once you've asked the questions and you're getting the right answers, you're getting, you're receiving the documents that you want to see, you're reviewing them, you're happy with what you're seeing, I think your confidence level just increases. You're gaining more insight into this whole, say a project like, where we are right now, Coral Bells. You're getting that insight into that project, you're seeing how it's working, and it's giving you more confidence. You have more confidence in the developer, you have more confidence in your future planning. So even in terms of the amount of money that you have put aside to put into this investment that you're making, you can feel more confident that the money is going to be put into good use, and that you will not, suffer as a result of, not having the right information. I think making informed decisions is critical. As I said, sometimes you can have a very laid-back attitude to real estate. So if you feel like you're the very laid-back person, just engage a lawyer. Lawyers are very, very proactive. We have dealt with so many lawyers who will ask us a lot of questions, and those questions, sometimes they're very tough questions. Sometimes they're very straightforward. But one thing I think we all understand with lawyers is that they're just doing the best for their clients. They're looking after their interests in the same way that we're always looking after our clients' interests. So once you engage a lawyer, or you ask the right questions, you're able to receive information that allows you to make an informed decision. And then ultimately, I think, to structure your investments better. So for example, you may find you have done some due diligence and found that there's an issue with the property that you're buying, and it requires, for example, a subdivision of land. So subdivision, what's the timeline? You'll ask somebody, what's the timeline for the subdivision? They'll tell you it's going to take us 6 months. 6 months to the subdivision. So for you, you have to now think, okay, how can I structure my payments to work in my favor, to take into account the subdivision process. So those are just the kind of things you need to think about, because it then just gives you a bit of a bit more, insight, and be able to make the right decisions as you're investing.
Okay. So maybe just to highlight, if I fail to conduct due diligence, what is likely to occur?
Essentially, what you're doing is you're going into a transaction, hoping and praying that the developer will deliver on their promise. So you've not taken the additional step to actually confirm what they said. And I think maybe we can just mention there was a Supreme Court ruling on this particular issue, where essentially it just emphasized the importance of doing due diligence before going into a particular transaction. Because you can't now go back and seek recourse from courts if you yourself, when you are going into that particular transaction, didn't take the requisite steps to, number one, ensure that it's a safe, secure, and sound transaction. So it becomes very difficult for you to seek legal recourse on that particular transaction. So it's like you're walking in blindly, and you're just hoping.
Nothing goes wrong.
This is just a random thought. There's a statement I came across, and they were saying that when you conduct due diligence, you're most likely to be, in case the parties or the developer involved did not disclose certain things, so the law is able to protect you. Is that true?
Well, you find at that particular point, you've not formalized that particular transaction. You put in place to make sure that you protect yourself in light of this new information that has come up.
Okay.
Or what assurances is the developer giving to give you that comfort to go into this particular transaction.
Okay.
Yeah.
I think also it also goes to when you remember we discussed looking at the sale agreement, making sure you understand the terms,
Yeah.
and understand like how the transaction is flowing, what is the developer agreeing to, what have they what have they told you about the project.
Yeah.
So an agreement, once it's signed, it's a binding agreement. Whatever's in the agreement is what is going to guide the parties. So you who may not have done due diligence are now stuck with an agreement which you may not have understood properly.
Yeah.
So it's important just to have that process of due diligence, not just with the documents you receive, but also in terms of understanding what the transaction is all about.
Okay. Maybe sometime in the series we'll get to talk about agreements.
Yeah.
And really dive deeper. Because now sometimes you might find the agreement does not favor you as the person purchasing.
Yeah.
So what do you do in such instances? Now, effectively, you're able to even plan ahead. So how does due diligence actually help you to plan ahead?
Essentially, how it helps you. What I'd say is due diligence helps you make informed decisions, and this is not just off a gut feeling. It's based off facts, figures, and tangible information that you've received based on the research that you've undertaken on this particular transaction. So it's like data-driven decisions, which are actually the best decisions to make in such situations. So it helps you, number one, understand the level of risk that you're getting yourself into and making an informed decision. Am I comfortable with this risk? So like for instance, you might find maybe the developer you find there are developers who usually take financing to construct the development. And at that point, you'll find that particular bank will charge the property. So once you do a land search on the property and you find that there's a registered charge in respect to that particular development, am I comfortable going into that transaction? Because at that point I'm made aware that there's someone who has an interest in that particular property, and should the developer not fulfill their obligations, then they can exercise their rights over that property. So am I comfortable with that level of risk, and what has been done to give me comfort? Such things. So it helps you understand your risk, manage your risks in such situations, and then again, once you've seen that, like Fidel had mentioned, if let's say you come here and you decide to buy an apartment and you're told the construction period is within this particular, is within 24 months, then you decide, do I want to, it helps you plan your finances essentially. So do I want to pay in 24 months? Do I want to take a 60 months payment plan? Do I want to do a 20% deposit? Do I want to do a zero deposit? Such issues. And at that point, then you know what payments are due at what particular stage. So you're able to budget and plan for them. I think also importantly is that it helps you, like we had mentioned earlier, when dealing with growth, pick the right investment vehicle for you. So you sit down as a group and you say, we might want to form a company and channel our funds towards this particular investment, and this is how this particular company is going to run. And these are going to be the directors of the company, and this is how we agree on returns. And in the event you don't make a monthly contribution, these are the measures we are putting in. So with a company, it becomes easier. So just doing your due diligence and asking these questions, it helps with a lot of planning. and essentially you're planning with the end in mind. So it helps you, it makes the transaction seamless for you. So you find you're not being forced to make decisions midway, or you're not finding yourself in a situation where you'd have made a different decision, which would have impacted you less financially. You know.
Yeah. Okay, interesting.
I think maybe I'll just add, due diligence is not just at the initial stage. So you're putting to task somebody on delivering certain things. So if it's like a developer, they're going to finish within a certain period. Halfway through the development or a quarter way through the development, just call the developer, find out where are you right now. What's happening? Is the project on track? Is it not on track? And that's due diligence actually. It's just keeping yourself informed about what's happening with your investment. So it's a critical part, I feel.
Okay.
Yeah.
I think that is quite interesting, especially the finance bit of planning yourself. And when it comes to property, it's quite expensive. Like it's quite expensive, honestly. It is capital intensive. Yes, exactly. So, and I think Tsavo, we've tried to help our investors achieve that, where you can be able to plan yourself ahead using the zero deposit payment plan, where we have a flexible payment plan of up to 5 years. So what you just do, you just divide the price of the unit that you desire of the property that you desire to purchase by the number of months you're willing to pay, up to 5 years, and that allows you to pay as little as 35,000 Kenyan shillings per month. And I think we have covered much ground today for a start. So, and I know most of our viewers maybe have questions, and I see a question by Andrew Tito. Andrew Tito says that, Diana and Fidel, you say that we need to learn to ask the right questions. Do you have a list of basic questions we should ask that you can share? And I think the good news is we have a document.
Yeah.
It's called the Ultimate Real Estate Investment Checklist. So we have prepared that document for you with the exact questions, and there's a number you can score for each question, so that now out of the total, you can be able to tell, is this risky investment? Should I proceed with caution? Is it go green? Like, is it? Yeah. So this document will actually help you, and I would like you to stick throughout this webinar, so that even as you're asking these questions, you're asking the right kind of questions, and even in the interactions, because the better you understand these questions or just the real estate space, the more you're going to be informed, and you'll be able to make the right decisions.
Yeah.
So thank you so much for joining us. I don't know what are your parting words?
I'd say my parting shots is the real estate industry in Kenya is quite dynamic, and as much as there are developers who are trying to do good, there are also those who are trying to swindle. There are those who are trying to swindle investors or purchasers. So it's important that we have this particular conversation, and I don't think it's a very timely conversation, especially with what's happening in the country. And I think it's important that we try and educate each other on this particular matter, so that it becomes easier for investors to, to know what's a legitimate, who is a legitimate developer, what is a legitimate investment, and once they're able to identify that, then they'll be able to know who is trying to swindle them.
Yeah, I think my parting shot is that for investors, be diligent, be proactive. The real estate market in Kenya is very vibrant right now, especially with the conversions, with the new sectional titles. There's a lot happening in the real estate sector, and you as an investor need to be, stay informed, speak to your lawyers, get insight into what's happening, so that you're able to make the right decisions and invest as much as possible in the right way.
All right. So if people want to find you, where can they reach you? Maybe on email, maybe you can tell us.
We are based in Westlands, in a building called Carlson Towers, second floor left wing. Our offices are known as FMC Advocates. Should you want to reach us on email, you can just drop us an email on consult@fmcadvocates.com and we'll get back to you. Yeah.
All right, thank you so much for joining us. Looking forward to the next part of this series. Have a good evening. And so if you're joining us right now, we have been talking about due diligence and what is the importance of it. And our next part series will be trying to understand the parties to the transaction. Who are these people who are involved? Yes, the investor, the landowner, the financiers and the developers. We'll be digging deeper to understand who are these parties that are involved in the transaction. And talking of due diligence, it is very critical for you if you're planning to invest with us to do your due diligence. And part of it is actually subscribing to our site updates. So every single week on Saturday, we send site updates with the updates on how the projects are faring, where construction is at. So please make sure that you subscribe to the site updates. A link will be sent in the description box, in the comment section below. And also, it's going to be a long weekend. We'll be having a holiday on Friday, so those are 4 days of holiday, 3 maybe. That's forever for most of us. So we have Homes Expo at KICC. So part of your due diligence is coming and actually interacting with our fire partners, get to know, ask these hard questions that we are telling you. And the good thing is that we have a physical copy of the real estate investment checklist that we'll be giving for free. So please make sure that you bring along you tag along your friends and relatives, those who they really want to invest in real estate, and we'll be there from Thursday, that is tomorrow, all the way to Sunday. So we hope to see you there. And also make sure that you download the due diligence checklist. We have it there. So this you're going to need it for the rest of your life. When you're making choices to invest in real estate property, because that is where the real wealth is. And also watch out for a new project which is coming soon. The details will be coming very soon. So if you're planning to do your due diligence, unaweza harakisha so that when the project is here, you can hop onto that bus. And lastly, please remember to subscribe to our channel. We have much and more of these conversations ongoing every week on Wednesday, as well as educational videos and other series that we post every other time. So if you don't want to miss out on what is happening also in our community, and follow us across all our social media platforms, that is tsavo.ke, and let us know the kind of content that you would also like us to continue sharing on these Wednesday webinars, as well as across our socials. And with that, God bless you. Have a good night. See you next week on Wednesday.
Owning your first apartment in Nairobi has never been easier. It's simple. With zero deposit and 0% interest rate, you can pay as little as 30,000 per month for up to 5 years. Just divide the price by the number of months you want to pay. Visit www.tsavo.ke to learn more.
When we started this business model, we naturally were a bit shy to get into town. So we started building our buildings in areas that were off. Our first project was in Rongai, Mbakasi, Thindigwa. But as we did a bit more, we gained a little more confidence. And I think in 2020, we came close and went to Ngong Road, Wanye Road. That was the closest to any major center. And when our investors and residents saw that we could, come near, they began to demand a little more. See, at the beginning, we were being compared with other developments. But as time went by, our residents started comparing us with our previous projects. So people are becoming a bit more discerning. They're asking for more, and they're asking for better locations. Now, we divided Nairobi into two zones, Zone A and Zone B. So Zone A is where we have most of our projects, in the periphery of the city. That is Zone A, because that's where most of our work is. Zone B is right at the center, CBD, Parklands, Westlands, Nairobi West, that kind of thing. And for about 2-3 years now, I've been really resisting going into Zone B, asking myself, is the land price worth it? Is the more demanding city bylaws, are they worth it? But I think getting feedback from our investors, getting feedback from residents and future residents, studying the trends of those areas, showed us that it was. And now 8 years later, interesting that for 8 years, Tsavo City has never had a building in the city center. We have had buildings near the city, but never in the city. But it's an exciting time that as we celebrate 8 years, we are taking our first project right at the center of things. And this is Premier, Tsavo Premier. A wonderful, wonderful project. It's the closest to the center that we have ever had. It's in Parklands, right opposite the Nairobi University School of Law. Walking distance from town, walking distance from Westlands, surrounded by universities and working areas. I mean, it's by far the most superior location that we have ever had. And we think just that location alone answers the questions that people have been asking. Can we get better? Can Tsavo be more refined? There's something I always like to post, that affordable doesn't mean cheap. Why just because it's affordable doesn't mean that it has to be so far away. And we have put up this building. The location is first class. The design is something else. I think of all our buildings, it really, really stands out as very, very elegant. The tallest building by far, ground plus 17 floors, with a rooftop right at the top. So in terms of amenities and facilities and the design and the elegance, and the location, these are things, and it's not for everyone. It's not every resident who will afford there. But there's some residents who just like to have their convenience. There are some Airbnb visitors who want to be right at the center. They don't want to get off. They want to feel like I'm in the hotel next door. There are students who, instead of staying in a hostel, want to stay in a place that is much better with better rents. So we have this thing that will cater for the working professional, it will cater for the student, it will cater for the short stay person. So very versatile in terms of function, very elegant in terms of design, super central in terms of location. And that's what makes Tsavo Premier so exciting. So we are really grateful to God for allowing us to do this thing. For us, only 8 years of existence and about 6.5 years of this business model, to have the courage and confidence to go right at the center, to put up a big building in the center of the city, that for us is something that we are really grateful for. We did not, we had dreams at the beginning, obviously, but in all honesty, I did not have the imagination that would be right there with the big boys. And now we are playing in the bigger leagues. And we are so grateful to our investors, because you have told us that's what you want. I remember when we did the Ngong Road, when we did Wanye Road, people were like, finally, a location I can relate with. Finally, a place I know. So Parklands, I think anybody has known Parklands from the time they were children, and you have always wanted. And you're saying, we will take affordable, super exclusive affordable into the center of the city. And that's what Premier is doing. And so I'm so excited to launch this project, Tsavo Premier, in this month of August of 2023. And we really, we are confident, we are really confident that it will sell well, it will sell fast. And more importantly, we believe it will let very, very fast, because by far, we have had very good projects. We have had amazing projects. But this is by far our most exclusive and most amazing projects. So thank you very much. We hope to see you there. We hope to see you joining the family. If you're part of the family, reinvest, refer, bring other people, and let's have a grow as we take you all towards financial independence. Thank you very much.